Wake up, Dona Timm checking in with Coldwell Banker Realty, and I would not be here on Friday if I didn't think there was something very interesting to share with you. And when I heard about it, it was from Jeff Kramer, who I want to introduce you to, because he's actually very, very smart, and he knows what he's talking about. And I've been in real estate for so long, right, Jeff?
Yes.
We don't
long.
even talk about the years. And I'm very particular who I send my clients to get loans, or who inspects their house, or who takes their pictures, or who does their painting or getting their house ready. So when I met Jeff at a big meeting, I thought, So let me introduce you to Jeff Kramer. Good morning, Jeff.
Good morning. My name's Jeff Kramer with Guaranteed Rate Affinity Mortgage, and I've been doing it a while too, about 28 years in the mortgage industry. And I don't know if I told you that. Well, I did tell you this. I was a realtor prior to that.
I didn't know that. But there's just an inherent experience level that when you meet somebody, if they've walked in your shoes and benchmarked that as part of an experience level, it comes out in conversation. I didn't know anything about Jeff, but I felt like he was very relatable. I felt like he could walk in the shoes of a lot of people that we try to help. Yeah. I mean, my background and Terry's background put us together from different parts of the world and different industries, but we had walked in a lot of shoes, Yeah. Terry being in real estate and a city manager and graduate school and law schools at night, and oh my gosh, going back and doing real estate courses till I was blue in the face, and it makes a difference.
Yeah,
so
absolutely.
Here I am. I want to talk to you today about something I didn't know anything about. And it was a new type of loan product that's very unique. And it's only one company that I'm aware of today about it. So, Jeff, before I spill the beans, why don't you tell us what it's called so this Texas girl will say it correctly after you say it a few times.
Sure, and we got to have this high-tech name. It's called Rate Fi, our company's name being Guaranteed Rate. So Rate Fi, and it's about helping people finance mortgages with cryptocurrency.
Really?
Yes.
That sounds so bizarre to me. I don't even understand crypto to the length or depth that a lot of people do.
Right.
But when I heard you say you can finance or get qualified using your crypto accounts, I looked at one of the people that I work with that I think she's an expert on animals and pets and kids. And, well, we have a crypto account. I could have fallen out of the chair. So tell us a little bit about this before we even talk about how you get qualified for it.
Yeah. So what a lot of people think is, I have crypto. If I want to pull money out of my crypto to put for a down payment on the house, great, I can already do that. I don't need your help, Jeff. Well, this is not that. What this is using your crypto balances to help you get approved by giving you more income by using your crypto as an asset. Key thing is you do not have to pull that money out and create a tax event.
See,
so
that's a really big deal.
Yes.
So give me some examples.
Yeah.
Say I have a client and they've got good credit. So I imagine credit scores.
Credit score is a big deal.
Give me an example of what would be a decent credit score before I even go down that
Absolutely.
path.
Yep. So we need a 720 if we're trying to do the crypto financing. 720 is on the low side.
And that's not an impossible number, everybody.
Not at all. No. Nope. And then 20% down payment.
Okay. So $1 million house, 20% down is $200,000 down. So
yes. Yep.
They've got to have that somewhere.
Yes.
But their income is such that in this day and age, a lot of people are independent contractors.
Yeah. Yep.
A lot of people are able to have new CPA rules and laws that they write off quite a bit of their income.
Absolutely.
So they might be short on qualifying for income loan to debt ratios if they want to borrow $800,000.
Yeah.
So simple numbers, tell me how that works.
Yep. So there's various different ways that can work. So I love to give examples, and we love to give easy examples. So let's say somebody has a salary job, they're a pharmacist, they make $100,000 a year, But like you said, Donna, they do all these other things off to the side, contract work, whatever, own different businesses. They're not either reporting that income or they're reporting the income, but they have so many tax write-offs that it's really nothing. The income is nothing. Then let's say they have $1 million in crypto. And
is that possible? I have no clue about anything like that. So I didn't even, I'm equating crypto as dollar for dollar, but that's not how it works. Isn't one thing of crypto worth a lot of money?
Yeah, so Bitcoin, for example, and I checked it before we came on, it's about 78,000 per Bitcoin.
I mean, seriously.
Morning. So just one, yeah. And
so
a lot
you
of
could
people,
have 10 Bitcoins or 12 Bitcoins and you got $1 million. And where do you get a Bitcoin from?
Yeah, so there's there's all kinds of places you can get it. But for the purposes of RateFi, which is our loan product.
And it's only to your guaranteed rate company. So
Correct.
don't be calling your lender and asking for the crypto loan. You're going to need to call Jeff.
Absolutely, yes.
What's your number, by the way?
214-803-3796.
Okay.
So we've got 4 different platforms that we can use to qualify this crypto. Coinbase, Gemini, Robinhood, Kraken, and Binance. Those are the biggies. They're all on your phone.
Who makes up those kind of names?
Probably young people younger than us, right? There's just an example of a Coinbase account, Bitcoin, and some of those things on there. So what you do is you just, like, if you have money in your Bank of America checking savings, you can wire it into Coinbase, Kraken, Gemini, Robinhood, and then you can start buying the crypto. Now, probably what has happened is a lot of younger people, Gen Z and millennials, they own 60, 70% of all this Bitcoin, Ethereum, and stuff. People older, Gen X, baby boomers.
ARPs.
Yes.
Shut up.
They have a very small portion of this crypto.
Okay.
So it's a lot of people that are younger that have this ability. They just don't know it yet because this loan is brand new. We just introduced it late February 2026.
Well, that's when I heard about it at a meeting, and Jeff was explaining it, but I jumped on it because I'm really busy.
Yeah.
And I don't just sell houses. I take the whole picture and from start to finish kind of micromanage and guide because honestly, a lot of people are so busy earning a living, they don't even know where to go to find a loan that's the best interest rates.
Right,
so
right.
Keep going because I think this is interesting.
Yep. So a lot of different examples because the one example I gave is the pharmacist making $100,000 a year. Let's say all of your businesses are self-employment and you're not even showing $100,000.
Well, the people that still have jobs right now, a lot of them are self-employed.
Absolutely. Yep.
Because nobody's going to fire you unless you fire yourself.
Ever since COVID, it has opened up. In fact, I was going to talk about a portfolio and combine.
Oh, yeah. We're going to get to that, y'all, because we're not going to spend all this time on something that might not be of interest. But I want you to be aware of it because you're going to hear about it.
Yeah.
Whether it's from someplace, you're going to hear about it. And I don't want you to think, oh my gosh, they're a crook, because they're really not. That would have been my first impression. Oh my gosh, they're hiding money and they've got crypto.
Right. Yeah.
But now I know.
Sure.
So keep going.
So you can combine a portfolio loan, and again, we'll talk more about that, with the crypto loan as well. So let's say you don't have no W-2s and you still don't have enough income on your tax returns. We'll then go the portfolio RateFi. So portfolio being a bank statement loan, 1099s, things like that, where we can combine that and then use the same example of the crypto. Now, there's different types of crypto that we'll only use. Bitcoin, which is a biggie, right? Ethereum is kind of second place. And then we got XRP and stablecoin. Now, with Bitcoin and Ethereum, how we use what the value is, today is 78,000. Normally, we take the 12-month moving average, which right now the 12-month moving average is probably 85,000. But in this case, since it's only 78,000 today, we got to take the lower. We can't take the average.
Okay.
Now, let's say.
And what do you do with that? When you take an average and it's 78,000 and they've got $1 million worth of it.
Yep. So we're going to take that and cut it in half, 500,000, and then we use it as an asset, but then it's a.
So that'd be like you have a free and clear boat, or you have a free and clear car, or whatever as an asset.
Yep.
I mean,
and we know.
And do you check to make sure they've really got that?
Yeah. And so
how do you check? Because I think it's in the cloud somewhere.
Right. Well, it kind of is. So what we do is you has to be in there at least 6 months in one of those 5 accounts: Coinbase, Gemini, Kraken, Robinhood, and Binance.
And so Kraken or Gemini, they're going to verify that they've had it in their account. So
And
you do a verification of funds just like you would
Yep.
a regular
Wells
Dona
Fargo.
Timm
Yeah.
savings account.
Absolutely. Same thing, just on
Okay.
a different format,
Okay.
essentially. But they have to have had it for 6
Kind
months.
of interesting, isn't it?
You
y'all?
can't just all of a sudden say, oh, well, Jeff, I just started it 3 months ago. Well, we got to have 6 months.
Okay.
6 months proof of it. And so we're going to take half of the $1 million, so 500,000. We're going to divide it by 7 years, which is 84 months. That number is roughly $5,950. Multiply that by 12 months. It's about $70,000 extra in income that we gave
Per
your
year.
Per year.
So that would show if you make $10,000 a month, they would let you add that $6,000 and show a $16,000
Exactly.
income, which
Yep.
would give you about $180,000 year to date basis to qualify you for the loan. Now, they don't have to spend it. It's
They don't
still
have
in
to
their
pull it
account.
out. They don't have to pull it out
Their
at all.
down payment is still a separate issue. So you
Right.
can't use the crypto, correct, as your down payment.
You could, but then let's say you took 200,000 out
So
of the million.
you'd not be qualifying on $1 million, you'd be qualifying on 800.
Absolutely.
So tell the truth, you guys, to your lender, Jeff, because you can't. I knew this from years ago because my husband told me because I didn't know. But Donna, you can't use the same $10 twice.
That's good.
Darn. So you can't use the same $200,000 twice.
Not in that case, but I will tell you the case that we haven't talked
Aren't we
about.
fun? Wouldn't you want me to be your realtor and Jeff your lender? Because
right.
we're going to get you a house one
That's
way or
right.
the other.
And we
So
know
go
how to
ahead.
do it. We know how to do it. So here's the case where you can kind of do that, and
I need to know
it
that.
has to deal with reserve money. Many people don't even know about reserve money, and what reserve money means is, let's say your house payment is $5,000 a month.
Okay.
Okay. So on this program, you have to, if you're buying a primary residence, you need 12 months reserve. So 12,
Using crypto?
well, if you're using the rate fi loan
Okay.
specifically. So let's say you have a $5,000 house
So
payment.
you've got to have 60 grand in
Extra.
reserves somewhere.
You can use that same 800,000 or million or whatever you want to call it in crypto that you never pulled out. You can use that as reserves also.
Well, this is like free money, y'all. It's totally honest, correct?
Yeah. And a lot
But
of
how long do you have to keep that 60 in reserves? The day you close?
soon as you
Bye-bye,
fund.
let's go
Soon
shopping?
as you fund, yeah. Soon
Let's
as you
go
fund.
buy a motorcycle? Okay.
Yeah. Most people that have that money probably won't do that, but you could if you wanted to.
Okay. That's a little confusing, so we're going to end this discussion, but give them the recap because
Yep.
it's a very valuable futuristic loan that only Guaranteed Rate has, but I think it's very valid in today because nobody wants to pull, if you're older, your CDs out for a loan because you need that security of that income stream.
Yep.
Nobody wants to pull their crypto out and spend it because it's so volatile and
Yeah.
it's kind of like, oh, tomorrow it could be double.
Yeah, and right now at 78,000, it has gone down because it's gone up in the past month or so, but it was up at 110, maybe
That's
even
crazy.
a little bit higher than that.
So recap how this
Recap.
works, and then I
Yep.
want to go to another more conservative type of interesting loan that would apply to many more people than crypto.
Yep. The recap, the product is called Rate Fi. We use crypto to be able to qualify you with higher income. So the crypto money that you have in the bank, we'll just call it the bank, but it's in either Coinbase, Gemini, Kraken, Robinhood, or Binance. We're going to use it as income without you having to pull it out. We're going to take 50% of what the value is. So it's $1 million. We'll use 500,000 divided by 84 months. That's about, like I said, 6,000 a month. You didn't have to do anything with the crypto, and now you make $6,000 more a month to add to your income. You can also use that crypto as reserve money, and again, you don't have to.
And
pull
the
it
day
out.
you close, it is not encumbered by a lien.
Nope.
It's not encumbered by signing anything. So you can use that asset in another way, and you've got your house, and it's totally honest. It's totally legal. There's no fraud involved.
Nope.
And it's really very smart. It might be smarter than just having a CD encumbered as a guarantee on a mortgage.
Yeah. I think the younger crowd,
I'm starting to think it's a good idea.
Oh, absolutely.
Oh, my gosh.
The younger,
I'm going to get locked up by my husband.
the Gen Z and the millennials have always been told, hey, you have all this crypto, but you can't do anything with it.
Yeah. Yeah.
Well, now you can.
Well, there you go. And if there's any questions, which there might be, I'm Dona Timm at 972-333-3370. I answer my phone. But also call Jeff direct. And if you can't remember my number, Jeff, give him your name and number and
Jeff
company
Kramer,
again.
Kramer, 214-803-3796. And let's give the emails. Jeff, Jeff.Kramer, Kramer, at GRARate.com.
Okay. Now, there's another product that Jeff talked about, and I jumped on that also because there's nothing traditional going on right now anywhere. And people that want to live on yesterday are going to be in yesterday.
Yeah.
And they're not going to accomplish their goals, whether it's housing, second homes are a big item.
Yeah.
And
Investment
they're just
property.
going to be working and paying rent somewhere. And there is an avenue for an interesting, totally honest, because I've lived through being a realtor, managing real estate companies. I've been on grievance and ethics for the state, went back and got all sorts of degrees in real estate and understand people. That's just part of who I am today. But this is something really important because I don't have a clear vision of what's going to happen in the future like I used to because things are very different and not as predictable. Agree?
Oh, absolutely. Yeah.
And I'm not cutting edge, and we're very honest, the two of us.
Yes.
We want to know the best for you. And I wouldn't align myself or even think about even going live in a discussion with somebody who would say something and I'd be horrified because I'd get up and leave.
Yeah.
But Jeff talked about this. And being a mortgage guy for 28 years and being a realtor before that, he knows what you're going through. He really does.
Yeah.
I know because I've lived it.
Mm-hmm.
Terry and I've lived it. We've lived it.
Yeah.
So tell us about this other loan product that is unique, not as unique as crypto, but unique to guaranteed rate.
Yes. So it's our kind of portfolio suite. Which
Tell them what that means before we
portfolio,
go further.
it means, let's say you just kind of like we talked a little bit on the crypto side, you have 5 businesses and you feel like you're making $300,000 a year. I look at your tax returns and it shows $32,000 that you reported to the IRS. Now, when you have your gross receipts up there of your $300,000, that's what you in your head think you make. But the $32,000 is what you reported to the IRS.
And that's what you're seeing.
So guess what? That's what we got to go by. If you want a regular conventional loan or an FHA loan or a VA loan, USDA loan.
Well, and those are products that are tried and true that are very common, even though some of the rules are changing on FHA now. We can talk about that. But I'm hearing more of that because people have got really good CPAs, and there are a lot of new laws that we don't know about where you are able to write off business expenses because they're very legitimate because things cost a lot of money, or if you have to travel, or if you've put it in an LLC, or you've put it, so continue. I'm just trying to expand in the language I know, but
so you have this, and I have a loan that I'm doing with a realtor right now.
For a realtor or with a realtor?
It's her personal loan. For the realtor.
So most people all know realtors are 1099s.
Yep, exactly. So you've got this catch-22. You want to get the lowest interest rates, but you want to be able to take advantage of all the tax write-offs, right? So if she makes $120 a year, but she's only reporting $60, it's not enough for her to get what she wants. So she's got this choice. She thought about redoing her tax returns to show more income, but I'm like, Ashley, nobody knows her last name. Ashley, if you go back to Uncle Sam and report the extra 60, how much more in taxes are you going to pay? 25% of that? Or you can go do a portfolio loan. Maybe the interest rate is 1.5% higher. Oh, Jeff, no, I can't. Hold on a second. The 0.5% interest
You start
rate.
to act like me.
Yeah.
You've been around me too long.
There
It's
you
like,
go.
oh my
so,
gosh.
A little animated. So maybe the payment, and I'm again just make up easy numbers, is $100 higher per month.
Interest
times
rate
12.
is just one little part of a deal. People don't understand that because, and just like appraisals, oh my God, the house didn't appraise. Well, there's a million parts to an appraisal. It's not just the house. It's not just the square footage. It's a rating that you get on appraisals. We'll talk about that at another time with an appraiser. But I learned, don't panic if it doesn't appraise because there's so many parts that can be fixed.
Absolutely.
So
yeah.
go ahead.
Yep.
So Ashley's trying to buy a house.
Yep. So let's say
doesn't need to redo her taxes to show more income.
No.
And a half a point more equates to maybe $30 a month or some
it'll
little
depend on
baby amount.
It'll depend on how big the loan is, right?
And if it's interest, it's going to be tax deductible most
exactly.
of it. Anyhow.
Hello. Yeah. So now you get a bigger tax deduction. But let's say it's $100.
Okay.
But Jeff, I want my payment at this. But Ashley, you're going to have to now give the IRS 20 more grand to be able to accomplish this. Whereas your payment, $100 times 12 months is $1,200.
So you need to hear that again because I understand that. I've talked about that for a long time to people.
Yeah.
$100 a month more is $1,200. Like even when you reduce your house, if you need to do an improvement, let's pay $3,000 for an improvement to fix something on your house rather than reduce it $25,000. Yeah. It's a strategy as opposed to an obvious plan. Yeah. Strategies are much more defined and much more important to accomplish. And so you need smart people around you that can help you implement a strategy. Yeah. And this is a strategy, a portfolio loan. You didn't tell them the definition of that yet.
Well, the portfolio, basically, it's just outside the box. Let's just say it's outside the box.
And it's kept in-house most of the time by the mortgage company.
Now, if you're a realtor and you understand some of the term, I don't like to use this word. It's called a non-qualified mortgage, non-QM. I don't
even know that term.
Yeah, see, I don't like to use it, but a lot of loan officers will use it. I'm like, great, I know what it is, but nobody else does. So
yeah, I never
let's
heard
use
of it.
portfolio. It's an outside-the-box loan.
Do you keep it within your company and don't sell it, and it's a portfolio, or are there people that buy portfolio loans?
There's potentially guaranteed rate would service the loan.
Servicing is what that means when you keep it in-house. A big money maker for lenders, my understanding is, they bundle up all their FHA loans. So there's a conformity to those mortgages. They put them all in a pot, and then they have investors like Lehman Brothers or Merrill Lynch, and they buy those because they generate a lot of income for people who are investing in certain type of issues. But portfolio means you're really a good potential for the bank. They'll just keep it in-house, and they'll generate that income, and that income comes from your monthly interest rates.
Yep, exactly.
Right? So exactly I like portfolio loans. I don't think that they're unique. And so when I find a portfolio lender, it is. They'll look at things outside of the box because they're not bundling them up to ship them off to some big company in New York, and they cannot have one variance to them. Mm-hmm. Right?
Yeah, yeah.
See, I was never a lender, but I walk that walk with my clients, and I have to understand it. So, okay, so you'll look at their bank statements. Let's get back to basics on that.
Yeah, so there's...
but we can't help ourselves because we enjoy this so much.
And there's different variations of the portfolio loan, one being the bank statement. We look at bank statements, and let's say they've got $200,000 flowing through their bank statements. Now,
how do they get their bank statements? Most people don't even know how to get them. Are they online?
Yeah.
Will you just... do you order them directly from the bank, or will you take them from that person?
No, that's a good question. There's probably three ways. Number one, old school is people get them in the mail because they haven't established an account online. The main version is you've got your Wells Fargo account online. You log into your Wells Fargo account. You send us 60 days worth of bank statements.
Directly from them.
Directly from them. Or, and most lenders have this, where on a one-time basis, you can sign up in through our portal, which is a loan portal that's created when you apply for a loan, where we have access to just getting the balances from your bank account.
On a monthly.
Yep, on a monthly basis.
That tells you everything.
Without you having to do anything except for basically sign up for it. That's the easiest. Now, I know some people are like, I don't want you guys having access to... Well, we have access to your numbers anyways. If you give us the bank statements, this is just easier, but I get it. Some people don't want to do certain things. So we got 3 different ways of obtaining the bank statements. So we got bank statement income. Now, if let's say they have $200,000 flowing through their bank statements.
And that's on a yearly basis, because if it's a monthly basis, you're not talking to either one of us.
Right.
You don't need us.
Yeah, you should be paying cash. But hey, no, get a loan. But we don't use $200,000. The whole reason that you didn't qualify on your tax returns is because you didn't put enough money on your tax returns. We're going to use 50% of that, so it's $100,000. Now, depending on what your business is.
Say that again. So $200,000 coming through your bank statements, or say $20,000 a month. They're going to only use $10,000 of that to qualify you as your income, but that's better than showing 3 cents on your tax returns.
Exactly. Now, if there's a case, and everybody's got different companies, they got different sets of tax write-offs. Let's say it's an online cloud business, and you're working from your house, and you hardly have any tax write-offs. If we need to, we can get a letter from your CPA, provided the CPA will do it, because they won't all do it. Some of them, the big companies, are like, no, we won't do that for you. But
and that doesn't mean that there's something wrong with you. If Jeff hears that CPA won't do it, there's other places that you can.
Yeah, then we might have to change CPAs if you're trying to.
I've been there.
We've done it. Trust me, we've done it. So
don't freak out if you're big 10 accounting firms, because they're so risk adverse.
Yes, they got attorneys tell them don't go outside the box. Well, we're trying to go outside the box, right? So what we can do is get a letter from your CPA, say you have a cloud-based business, you work from the house, and you only write off 25%. As long as your CPA would write a letter, hey, I've been John Thompson's CPA for 7 years. His tax deductions run roughly 25% of his income. We'll take that. Now we're going to use 75% of the $200,000.
That's a big deal, y'all.
Yeah. So
I've used that for portfolio loans, and I've had it both ways. Won't get the letter, get the letter.
Yeah.
If they don't get the letter, is the deal dead?
If they don't get the letter in either case, then the deal would be dead. Unless
and
then
we'll look at another way to do your loan.
We start fishing for other ways. Hey, does mom and dad, grandpa, grandma have money that we can bail us out of this situation? But here's the key. You got to do this stuff up front.
Ta-da! Plan ahead. I usually, when I'm showing houses and I meet someone new, I have a pretty good understanding of this and a lot of experience. And I will help you, but I will ask you a bunch of questions up front, not because I'm going to go tell anybody. I'm just trying to help you get ready so I can call Jeff. Because I'm not sending you to Jeff to have you beaten up. I'm going to find out first the best way. And a good realtor, your realtor, I hope, does this for you. But I ask the questions like, how's your credit score? How much do you make? How much is your alimony? Where are your kids? What's your debt? What's your house worth? What kind of equity? I'm not prying. Because I have no one to tell that to. I don't care. I'm trying to already get you ready for Jeff. Yeah. And if Jeff can't do it, then Jeff will help me find somebody else, because there are other kind of lenders that Jeff knows. I called him with an issue the other day. Somebody needed hard money to carry him through until we could sell their house, because unfortunately their business stopped performing. But they certainly didn't want to wreck their credit, and there you go. And so Jeff helps. We help people. I mean, not everything is a deal. Not everything is easy. There was another question I called Jeff this week. Somebody wants to buy a big piece of land in another state. Half of it's in ag. The other half is in homestead. Can I combine both of them and do one mortgage? Can we replat it? It's a 1031 exchange. Can we ag the 1031 on that, or does it need to be on a homestead? And Jeff, I'm wearing him out.
Yeah.
But we're willing to help you. Without any obligation. We don't want you to sign anything with us at that point, because we might not want you either. Truthfully, because we can't help you. Yeah. But we can get you where you need to go. So this portfolio loan.
Yep. So in that case, we left off with the CPA helping us out in this case, giving us 75% of the income. Now you've got other loans. We've got a loan it's called a P&L loan. In that case, we're not even getting bank statements. As long as the CPA is willing to say, give us a simple P&L saying they're going to show the positives and negatives and give us a P&L. 20%
Tell them what that
down.
means.
P&L is a profit and loss sheet for your business. And again, it's very similar to.
All right, so back up. So if you own the business and you're buying the house and you're one and the same, can you use the business and you being the same person to qualify you with the P&L?
Yes, absolutely.
In the old days, you couldn't.
Right.
You had to show that the P&L would let you borrow the money from yourself. You probably still need that,
We
right?
do need that letter too, and that's one of those CPA things.
This is taking me back
'Cause if
25 years figuring out how to do something.
If the business had 200 grand, because a lot of people use the business and put all the money in the business.
Do.
Yeah.
Especially oil and gas people.
And then if they wanted to pull 100,000 out, we do need a letter from the CPA saying you pulling $100,000 out of the account doesn't materially affect the business.
And it's your money in the business account to begin with that you haven't raised all this money and it belongs to somebody else, right?
Yep. Yeah.
Can they?
Absolutely. I mean,
Can they verify?
We got to do if we're doing bank statement loans, we're going to do 12 or 24 months. If it's P&L, I think we've got to do six months. So we're going to see the stuff in there. So
there is a way, honestly, to do this.
Yeah.
And if there's a way dishonestly to do it, well, we'll tell you that too, because we won't be able to do it for you.
Yeah.
There's
other stuff. There's a 1099. You mentioned all realtors are 1099. That's how they get paid. Now they might create a business and pay themselves a W-2, but that's a whole another story. But if you get a 1099, you make $100,000. We actually will use 90% of that. So no bank statements, no nothing.
Really?
We're just going to use 90% of the
of your 1099.
Yeah. You got to be in there for 2 years.
Stop. That's a big deal. I didn't know about that.
Yeah.
Terry and I've always been 1099. So you'll look at that and you will know it came from Coldwell Banker.
Yep.
Has to come from your company. It can't be something glued and pasted together, right?
Correct. Yes.
Okay. And they can easily do that for you wherever you are. And does it need to be sent to you directly? Or can I get it, give you a copy of my 1099, or?
So, yeah, various ways. Again, when anybody applies for a loan, we have this, and most banks do this, but you have a portal that's created. It's secure specifically for you, the buyer, and me, the lender. So everybody in my company has access to it, and then you as the buyer have access. That's the only people that have access to it. So we have ways that you can upload the 1099.
So on your 1099, you all, they will take 90% of that amount to qualify you for a loan.
Yep.
And what about before it hits your income tax and shows you what you write off about that?
Yeah. So the whole point of the 1099 would be if you have $100,000 that you report on your 1099, but you're only showing 50 on the tax returns. We don't want to use the tax returns.
Well, yay.
Yeah.
Big deal. That's a new revelation to me right now.
Here's the biggest thing.
That's what's the caveat, bad news to that.
Yeah. So, let's go to good news. People are like, yeah, but what are you going to tell on us? We are not the IRS police. We are not collecting tax returns. We're not going off and getting a lot of lenders. I think you were talking to somebody about getting tax transcripts earlier today.
Yeah, I'm trying to wait for the underwriter to verify that they filed
their taxes.
Yeah.
For 2025 or whatever.
Yeah, so, that's I'm hanging on to close this other deal by somebody, and the lender, it's not you, and I didn't pick him, but he had a relationship. And so we're closing late because tell them about that, but after you finish this.
Okay. So what we're going to do is we're not having anything to do with tax returns if we're going this bank statement or 1099 route. So
you will live longer if you go that route. I can just tell you. Right, Jeff?
Absolutely. And we'll kind of dive off into some other topics with it. But I don't even like to say this, but it's the truth. If you haven't filed tax returns for 4 years and you don't have any liens or anything, and you just have your 1099s, we can still do the loan because we're not looking for transcripts.
First of all, this is a revelation. I hope you're enjoying this because typically Jeff and I don't go live. We do podcasts at USA Studio. The owner, Rick Davis, is a genius. He will chop that up into little segments and you'll get pieces of us. But if you like this and you're interested, you can always write me at dttimm@gmail.com, dttimm@gmail.com, and we'll look at these questions, and Jeff and I'll come back live about other subjects to help you. And the reason I say that is for, you don't know this, but for about 10 years, I did the real estate hour on KRLD, and I was the realtor with Reliance Mortgage. Mike Anderson owned that company, and he and I did so many real estate deals together. And you remind me of him because you're creative and you're honest and your company is flexible. Yeah. And I used Mike for years, and then we used a title company, Mark Miller, who would answer title company questions, which were very valid because most people have title company questions. And then we used an appraiser who was our MC of Crossan and Dennis. Right. And so we would get calls all the time. And, I'd get calls like, oh, you're the realtor. Can the refinance, can we buy a trailer? Mm-hmm. That's a valid question. And today, as long as your trailer's attached to the ground, you can do a loan probably on that. In the old days.
If it's a fixed.
If it's a fixed. But if you would like us to start our own real estate hour, Jeff and I, we'd be happy to bring information to you. Right, Jeff?
Absolutely.
We don't even practice what we're going to say. No. We trust each other and know each other, and we're both smart enough in our little field to not be worried about what we're going to talk about because I'm going to get to the bottom of something, and Jeff's smart enough, and when he starts saying, duh, or if I kept saying, well, I don't know, we'll find out. Yeah. So finish up about this because we're taking up a lot of everybody's time.
So let's move into a couple more options on the portfolio product. One is going to be called a DSCR, and that's going to be for investment property purchases.
Okay, now investment property, a lot of my clients are doctors.
Okay.
They like investment properties.
Yeah. And some of them might have 10, 12. I have two husband and wife doctors. Each of them own 10 properties.
There you go.
When you go Fannie Mae, that's the maximum you can own.
Oh, I didn't know that.
Yeah. So if you wanted to start doing more, we can go into the DSCR loan, which stands
for... What does that stand for?
Stands for Debt Service Coverage Ratio.
Say it again.
Debt Service Coverage Ratio.
Okay, that is a very interesting thing because a lot of people are putting their money into rental properties because a lot of people are moving here. They don't know where they want to live yet. Yeah. They're being transferred. A lot of people also are selling their big homes, and they don't know where they want to go, and they want to go into rental property, and they want to buy their own rental property and create an entity for that and then lease it to themselves. Okay, so go ahead.
Yep, and we can do them in an LLC. So you need 20% down.
That was another big thing. They can do them in an LLC.
They can close in the LLC.
Typically, a regular mortgage can never close into an LLC. Yeah. That is your limited liability company that you own. You have to close it in your name for most mortgages and then move it into as an asset into your LLC.
Right. Yep.
So because this is not your primary residence, that's how you can close it in an LLC?
Well, that and the fact that it's this specific DSCR loan.
Say what DSCR loan means again.
So what it means is debt service coverage ratio. Simply put, we go get the appraisal. Yeah. And let's say
And you hire the appraiser.
Well, that's a complicated situation. Me as the loan officer years ago, they sunsetted the ability for a loan officer to speak or...
I don't mean you personally, but you order the appraisal.
Us as a lender, we have appraisal management company, and we have certain appraisal management teams out there in the Dallas-Fort Worth area or around the country.
Right. Yeah, I mean, it's a hands-off deal, but you order the appraisal. They don't give you the appraisal.
Yes.
The individual.
The buyer and the individual has nothing to do with trying to get an
that needs to be clear.
Yeah, absolutely. So then if the rental income or the comps that the appraiser compares this home to is $2,500 a month, and let's say you're
Did they compare it only to rental properties?
they only compare it to rental properties.
So they pull off through the MLS. We have a whole database of existing rental properties.
Yep.
In all the different areas. It's a personal field called residential rental or commercial rentals. I mean, it's easy to find. So don't worry about having to go around looking for things for an appraiser because he can find them.
Yep.
So go ahead.
So let's say the rental comps average $2,500, and that's what the appraiser tells us.
Per month. That's the rental income from this neighborhood.
Yep. And so let's say the mortgage payment with taxes and insurance is going to be $2,500 also. What we get there, it's called a 1/1 ratio. So a 1, because it's $2,500 rental income, and that's what your mortgage payment is. So that's equals 1. Now and you get a certain interest rate on that. Let's say
higher or lower?
I'm going to give you the lower interest rate next.
Okay.
So I'll call this par rate. Par is if you're a golfer. It's
so it's
even.
a wash.
Yeah, it's a wash.
You're not going to be spending money out of pocket until you lose your tenant.
Yeah. So then
Does it have to have a tenant in it?
No, we're going to go. I mean, obviously your goal is to get a tenant as soon as
Right.
possible, but we don't have to have it because we're going to use the rental comp.
Okay.
Okay. So then if you get a 1.25, what does that mean? So let's say your payment is $2,500, but the rent income from the appraisal says $3,250.
I've got that going on right now.
Okay. Perfect. So now you get an interest rate better by like 1/4 or 0.5% better
To buy the house.
to buy the house. And it's because it's a risk factor for the lender. The higher the rental comps, the lower your payment is, the better your interest. So interest rates is all
Did
about
you get
risk.
that?
Yeah.
That's pretty interesting too.
Yep. Now,
So
on the other side, we can still do it if it's under 1. So, and I don't know many people that want to do this, but there be some.
well, but
So if
guess
you get,
what? Your CPA might say you need to take some losses.
could be. So you get a rental comp from the appraisal that says that it's going to be only $2,000 per month, but your mortgage payment is $2,500.
Don't be afraid of that. Now I'm hearing for the first time.
Yeah,
It's
'cause
just
just
a
like you
little bit
said.
of higher interest on your mortgage. What's the down on buying that loan?
20% always on this.
So if it's
DSCR
a $300,000 house, it's a $60,000 down, and it's a $240 loan amount,
Mm-hmm.
and it could vary depending on what the property generates on a monthly basis
Yeah.
for rent.
Yeah.
And the condition. Now the condition makes a big difference because I'm court appointed, and sometimes I get to have to sell houses that have gone through the banks or have gone through lawsuits. And there have been a few that I wouldn't even get out of the car because I was afraid in that neighborhood. But they were being bought like crazy by investors for future rentals. They just needed to repair them.
Yeah,
I mean, some of these places had holes in the wall, outside wall. It was like, I'm not getting out of the car. I was afraid.
Yeah.
Or I'd go up to the door and there'd be 150 dogs in there barking their heads off. But the investor could buy that.
Yeah. So the point is you can still qualify if the rental comp comes in with a lower payment than what your actual mortgage payment is.
Because you might want to improve the house and then your rent will go way up. But at the time, can you refinance when you stabilize that?
Yeah,
and show-
absolutely. You can always refinance if rates get better. In fact, if you, like you said, fix it up and then a year
Yeah,
later.
they're going to fix it up.
Year later, the $300,000 house is worth $350,000, and then it also gets a higher rental because you fixed it up, so you get a double whammy there.
Hey, investors call me all day. Listen, investors, and I get emails all day. Do you have anything? Do you have anything? Anything coming up? Anything coming up? And I've had a couple of them, but I didn't know about this program to help you. And also, this program will help you get the house because not all investors pay cash for houses. You can buy these kind of crummy houses on a higher interest rate because that's your upside potential for profit, right?
Absolutely. You could refinance it in the case of
So when
fixing
you look
it up.
at it, obviously this doesn't get appraised by FHA or VA qualifications, right?
It'll be a conventional loan appraisal with rental comps. By the way,
So-
those are more expensive. When people start seeing those appraisal bills, they're usually an $800 appraisal, and people are like, why is it so expensive? because the appraiser has to do a lot more work.
Yeah, they do. But a good agent like me or your agent can pull a lot of those comps before you start. And then you've got the criteria that your client
what you're dealing
wants.
with, yeah.
And I didn't know anything about this, but if they're not going to be FHA or VA loans, especially FHA, because those loans have much stricter requirements on appraisals. And so this is really just an income-based kind of.
Income-based. We're not.
Not the person, but the house.
When people are typing in the loan application, what's your job history? No job history, nothing. We're not even looking at a job. So we're just.
Are you serious? You're looking at what's the credit?
The credit, it's got to be. Well, the credit doesn't have to be as high as that crypto. I think we can go down to a 660 on the credit. But then you're talking about higher interest rates, of course.
Hey, you might want to buy a house for yourself. Do this loan, create an LLC, be the tenant, pay yourself to live there, right?
You could do that.
This is a whole new world, you guys,
Yeah.
because life's hard. A lot of these young kids, I say young kids because my kids are older and our grandkids are much older too, but these 20-year-olds don't get stuck in a $3,000 a month rental somewhere because you might. I'm going to turn you over to Jeff. Give him your name again.
Jeff Kramer with Guaranteed Rate Affinity Mortgage.
And Jeff will send you back to me because he knows.
Absolutely, yeah.
At one point in time in my career, when I managed Prudential real estate companies, I was the HUD broker for the company. And I was a lot younger, and Terry was in banking, and it meant a lot to be able to help first-time buyers or underprivileged people or people that just wanted a home, the American dream, and we would buy the HUD houses. I would be their agent.
Oh,
so there's a house out there for you. Jeff will figure out a way, and I'm not too big for my, appearance to start at the ground and help you. Because it's a real pleasure for me to see you get started and be safe.
We got one more portfolio loan.
Okay, and I'm going to be quiet, and then we're done.
Okay, so now.
But we'll come back if you want us.
Now, this somewhat compares to the Rate 5 crypto, but it's without crypto. Has to do with just asset-based income. So lots of examples you can use is if, a husband or a wife passes away, they have an insurance policy, they get $1.2 million sitting in the bank. A wife is grieving, quits her job. She's like, but I need to buy a house for the kids. Maybe the husband died
I hear
young.
that.
Yeah.
I get those questions.
And the reason I'm bringing this up is because it's happened to me a lot. So we can take that $1.2 million and we'll basically extrapolate a monthly income out of it, similar to the Rate 5 crypto thing, but different. And we'll come up with a monthly income. They may put $100,000 down on a $500,000 house. Now they have a $400,000 loan amount, and we're going to create income from that $1.2 million, which is now going to be $1.1 million because they just used $100,000 of it.
Are you going to see where it's invested? Like
Absolutely.
Their income stream
Always.
could come from CDs, or
it's not even an income stream. It's just how much assets do you have, and we have a formula that we're.
Give me the formula.
I can't give you the formula. It's different for everything.
Okay.
Yeah, it's like an analysis problem.
Okay, so it's beyond us to figure that out.
Yeah, it's a chart that I
it'd be worth. Does that product work? I don't want to put
absolutely. I'll give
somebody
you an
grieving,
example.
little old me, into that, and then be told you're crazy, Don. It won't work.
I'll give you an example, and it was exactly
Okay, I
what I
need an
said.
example.
I always like to use examples, right? So the wife, her husband passed away. She was a school teacher, but she had kids, so she quit. She had roughly $800,000 in an Edward and James account. So we created that income for her, and we qualified for her for like a $520,000 house. She bought a $500,000 Highland home, great company. Guess what? Highland Homes couldn't do the mortgage. I could. So then the customer got to use the incentives for Highland. And still use me and get qualified to buy.
Because they didn't have that loan product.
They didn't have the loan
So
product.
here's a heads up on that too, you guys.
Yeah.
Call me, or if you want to go buy a builder's home or build a home, and they say the builder's giving you a $75,000 incentive to use their mortgage company. And you make loan app with that mortgage company, and they can't do your loan, which has happened to me for weirdest reasons on somebody who had a huge portfolio.
Yeah.
And then Jeff did the loan. I made arrangements for them not to lose that $75,000 bonus, which the lender was kicking in part of that bonus, because a lot of them do, because they're going to get it back on servicing or loan apps. So, yay for you.
Yep.
What was the little glitch that made you do that loan? This portfolio product that you have that they don't have at lenders? They didn't have it.
Yeah, they just are like, no, we can't do it. And here's what, and I shouldn't joke about this, but then the salesperson was like, well, that interest rate's higher. And I'm like, okay, do you want an interest rate and buy the house, or do you just not want to buy the house?
And listen, there's many parts to that interest rate.
Yeah. You either get the interest rate.
If you love America and you want to live here and you're going to buy a house and you can get into your house, I guarantee at some point in time, there'll be a product that they'll either go to a 40-year loan, or there'll be a 20-year ARM product that fixes the first 10 years. They'll bring that back with a lower interest rate. Jeff will figure it out. Let us get you into a home.
Well, guess what's going to happen to this young lady is she's going to go back to teaching, and interest rates are lower. So we're going to refinance her into a conventional loan at low rates, and it's only going to be about 1 year of taking the slightly higher interest rate.
You know, I could almost cry that I've met you now, because I worry about this stuff.
Yeah.
I mean, it's not just because I won't be able to sell a house or I won't be able to earn a living, but it's much bigger than a realtor. It's much bigger than Jeff. Jeff could be a lender anywhere. When you've got this kind of experience, I'm sure you get job offers every day.
Oh, the phone,
Weather's changing, that's why I'm coughing. But call us. And I appreciate the time. I appreciate Rick Davis and USA Studios. I appreciate the Dona Timm group at Coldwell Banker, which is Terry, Marnie, and Dwayne. We're pretty stable and smart. You can always get one of us.
Yeah.
So, say goodbye, Jeff.
Goodbye, everybody.
Thank you so much.
Thank
Dona
you.
Timm signing off.